Our traders, what's up? Jamie Setley here, Midweek Strategy Webinar with SB Trade Desk. It is August 28th, 2019. And as always, before we start, please let me know that you can see, hear, etc., etc. Can hear you all good, says Peter. All right, thank you, Mr. Green. All right, so I'm gonna dive into the post that I'm writing at the moment. So yesterday, talked about the comparisons between 1998 and 2019 in the equity market. Well, turns out that 1998 is actually pretty damn close to a lot of other asset class, more important asset classes, I should say. I mean, bond market is what, 7 times bigger than equities. FX is a lot bigger than that. Talking, was it 5-something trillion a day? So here is the DXY chart. I think I threw this up on Twitter last night. I was up all night looking at the stuff, just couldn't get it out of my head. So what we have here, okay, 97, 98's on top, right? 2018, 2019 on the bottom. So 97 up big, 2018 up big for the dollar. August, 97 high. Did have a high in August last year. It was not as big of a high, but it was a high, right? And then when you get to 2019, it gets really similar. So between 98, so you can see 98 right here, right? 2019. Okay, early Jan low had an April high in 98, an April high in 2019, a June low this year, a June low back in 98. We then had an August kind of double top of sorts in the dollar and DXY. Wondering if we had something like that here with the 8-1 high and then the highs over here. Not saying you can't go through and try to take it out one more time, but you'd be hard pressed to say that the similarities are not striking, right? Also, of course, you have price action for 98 and price action for 2019. This includes the very end of 2018. They both fit neatly into slightly upward sloping channels, right? All overlapping waves, right? Elliott would call this a diagonal, right? Notably an ending diagonal, which is what we've kind of thought this was all along anyway. But it's just interesting and somewhat, I guess, comforting, you might say, to see it, in this other form with another year where it looks so similar. So, the thing about diagonals is the reversal from diagonals is often pretty brutal if you're on the wrong side. It can be awesome if you're on the right side, right? So you get really big moves out of the diagonal, tend to go back to the origin of the diagonal at minimum. So in this case, that would be back here in the low from last September in DXY. So that would be kind of a minimum objective to look at. Before we start looking at that, I'm getting way ahead of myself here, right? We do first need to see an actual reversal, but let's continue on with this, and we could just show how close we may actually be to getting this reversal. All right, so here is just the overlay. This is simply DXY, the line chart, right, of prices from 1998, and just overlaid with now, right? So pretty simple there, self-explanatory, but you get the idea. Excuse me one second. Sorry, I had to sneeze. All right, another thing that I thought was interesting. So divergent signals, right? RSI. There's no RSI on this chart, but The magenta dots indicate periods of divergence, right? On the chart, this is a weekly chart. So gotta remember my definition of divergence. First of all, it's programmed here, so it's not like I'm just looking and saying there it is. There's actual rules to it, and you have to have a 50-week closing high on price, right? RSI has to be below its 50-week high, and this is the important part, RSI has to be below 65, right? A lot of times you will hear people say there's RSI divergence on this, where there's no real divergence, or what I would consider, or I guess there is, but it's really weak divergence, because RSIs make it 70 or 75, right? That's not really petering out. For divergence, you're looking for conditions that suggest the market has really run out of momentum, right? And that it's slowed enough to the point where it could reverse, right? It doesn't predict anything. It just says the conditions are in place for reversal because momentum is extremely low in the direction that asset's going. And in this case, we have a huge cluster of them. I do tend to pay more attention to clusters of divergence than a single reading, right? Although there are some single readings on here that have been pretty good. There's some single readings that have been pretty bad too, right? But the clusters tend to be pretty reliable. In fact, there's really only 3 big clusters on here. You have the 93-94 period, right? You have the 98 period, which is what we're comparing to. You have the all-time high back in 01, and you have now, and we've had a cluster, we've had divergent readings since August of last year. It's been a year. I mean, this is pretty wild. So from this point, not knowing anything else, we can say that we do have conditions in place for momentum is slowed to the point where it's, reversal would not be much of a surprise. Euro, by the way, today, so flipping DXY around for the most part, right? Euro made a DeMark buy countdown today, right? And since the downtrend started last year in the euro, the dollar uptrend started, we've had 3, including today. The other 2 right here, okay, last, what is it, probably July or August, and this would have been in, I believe, January or February, but either way, it doesn't really matter when they were. Point being is, even those, they were within the context of broader weakness, but even those were lows, minor lows, but they were lows to the day. So at least from a timing perspective, it gets you off on the right track. My bet here, obviously, is that if we turn up now, given all the comparative, analysis of 98 and blah, 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 that this time it's not temporary low or what have you, it's the real actual low, and that we go higher and potentially quickly. That is at least where my head's at on this. Okay, so obviously have a long euro position at the moment, and you got to respect, I guess, the possibility, be open to anything, I suppose, that if we do take this out, right, and then reverse, you just have to get back in, right? I mean, I'm not really one for just being like pull stops and hope for the best, because if you do that, eventually there will be a time when you are going to lose all of your capital and you will have no more inventory left to run your business, in which case that business is trading. So, could we turn higher literally right now? Certainly could. But if we brush out the lows and do another quick spike to the downside, it could be brief or what have you, because I really don't, the next thing that I would be looking at wouldn't be probably until 109.30, right? Now, I don't think we go there. I think we reverse now, right? Even look where the low was back on August 1st, right? That was the 4th square root progression down, okay? So, yeah, I'm looking for us to turn up and out of this garbage now. Moving on, though, I have an anecdotal observation. CNBC was on in the elevator earlier, and it's interesting that I was in the elevator at the time because I'm never in the elevator or watching CNBC, but they let off their show Fast Money talking about, they noted King Dollar. You know, for a show, and especially a channel, right, that is for the most part 100% dedicated to individual equities, maybe indices a little bit, but for the most part individual equities. The fact that they're leading off one of their popular shows talking about the strength in the US dollar is pretty telling, right? Like, file it under things that you don't see before a giant dollar rally, in my opinion. But again, we don't know for sure. So probably about there. I did see DSI readings yesterday, and I think DXY was up there. It was like 80, probably a little higher now. We were 90 a couple days ago, or like a week ago. Euro's 15 yesterday, probably a little lower today, considering that we did drop a tiny bit. But yeah, so moving on, more 98 stuff. All right, so again, it's not just equities in the dollar, it's also bond yields. So this is in black is the S&P 500, and in red is the 30-year Treasury yield. Okay, so let's go back and look at some of these similarities. All right, really, it really starts, I'd say, with the January 98 and January 19. So you have early year lows, right, in 98, in both yields and stocks in January. Into March, you get a slight pullback in 98 and a slight, top in yields. Same thing in 2019, right? Pullback in March, early March, March 1st in 19 and March 3rd, 98, and you get a pullback in yields. Back in May, you had a May top this year. Remember that top? I think it was May 1st. And we had a minor top back in 98, but it was a high, and we went sideways for a bit in equities then. And at that point, both in 1998 and in 2019, 30-year yields really started to drop, right? Started to accelerate to the downside. Then taking us back to July, okay, July 7th, 98, you had a temporary low in yields and a bounce, right? That was right before the top in 1998 in the equities, in the equity market. Into July of this year, same thing, right? You had a bottom, a bounce in yields, and that was right before you got to the top in the equity market this year. Fast forward, yields are plunging. Stock markets, they always say the last to know. And eventually they tend to catch up to yields, right? Because they are supposed to say kind of the same thing. Tanking yields are saying that there's zero growth, or people think there will be zero growth. Eventually stocks realize that, and you get something like this, what's happened in 1998. So again, we're there. If it's going to happen, it's going to happen over the next couple of weeks, in my opinion, as far as a market drop. So there's that. Eventually, by the way, this continues, we could be looking for a pretty decent size low in both yield, so top in bonds, and the S&P. All right, continuing on. So kept looking at different assets, and in 98 now, and crude oil is also part of the story here. So crude oil in this picture is in magenta, right? On the top is 98, on the bottom is 2019. And this one's really interesting because remember yesterday I wrote about crude and I was saying I was constructive. Crude looked good. We hit the 618, looked pretty good. That to my brain, I guess at the time when I'm thinking that there's risk of a stock breakdown over the next couple of weeks, it didn't make a whole lot of sense from the standpoint of you're going to get a sell-off potentially in equities, or if that's going to happen, right? Then how the hell would you think that crude can go higher? Well, first things first, and I did say this yesterday, is don't think about, don't try to backdoor market, right? Don't try to trade one market off another market, really. Look at each chart based on its own merit. So that's the first thing. But then when I saw this, I was kind of blown away. Look at crude in 97 and crude in 2018. They both had huge October peaks, right? Crude absolutely got destroyed, right, after that in both years. Then fast forward, and this year we had a June low in crude, just like we had a June low back in 98. And we also had an August low in 98, and we had an August low this year. We've turned up, and we're at the same exact point in crude right over here, where you kind of made like some higher short-term higher lows. So the same time is when the market fell apart, the stock market fell apart, and crude held on fine. In fact, it really accelerated to the upside after that washout into early September of 1998. So that similarity is there as well. Okay, so that is it for the similarity charts for now. I will say that the one chart, which is not similar at all, and not going to be a surprise here, but is not similar at all, is gold. I mean, back in 97, 98, gold was dropping as, as the dollar was holding up. That's clearly not the case now. Gold has been on fire. You could rationalize it all you want. My, guess or opinion, it's a function of rates being so extremely low all over the world that it's made people flock to gold because it's fine to hold gold, right? The carrying cost to hold gold you're not getting paid to own anything else anyway. Final chart that I wanted to show you from today's post, and then I'll move on to live charts, is Bitcoin actually. So Bitcoin on top and the S&P on bottom. They've had a loose relationship, right? Like they don't, the highs and lows and that stuff, they're not, super correlated by any means, but the general idea, right, of kind of animal spirits, right, higher asset prices, gold going up, not gold, but stocks going up and Bitcoin going up and down simultaneously is kind of a thing, right? Very generally, like the big fourth quarter meltdown in Bitcoin, right? It was in stocks too. Okay, Bitcoin based for a while, it bottomed well before, but it did base, and it almost looks like it kind of leads it a little bit, doesn't it? But we should take a look at that. But then you had a breakdown today in Bitcoin, which is interesting. So right here at the end of the day, we had a drop, and we're right at that center channel line on Bitcoin. And if you start to break down from this, right, you're at the median line, which indicates kind of acceleration risk, right? When you're at a center line from a market, this is a really good channel. You can see we hit the center line, came back at 25 line, center line, 25 line, third test of the center line. Usually don't really hold up after the third test. I shouldn't say that. I don't have evidence of that. What I should say is the more you test it, the more likely the market doesn't hold it, right? That's true with any method of analysis, whether it's a trend line, a median line, a moving average, a horizontal level, whatever. So I don't know. When I look at this, you can see potential for a breakdown, and in light of where we are on the S&P, that's pretty interesting. So, all right, now let's go look at some charts. So I want to investigate actually this Bitcoin S&P thing, see if we can do anything with this, because that's kind of cool. All right, let's take a look here real quick. All right, so bear with me while we take a look at Bitcoin and all right. Let's go back to, I don't know, we'll just pick a random time over here. Let's just see. All right, so that would be where we are now, right? But if we do a little, maybe a little lead lag time, I mean, that's really pushing it. But if you do that, you do actually line up the high here and the low here and the highs up here. Does it say that we're going to go absolutely ballistic for 3 weeks? I don't know. So either way, Bitcoin at risk of breaking down, and S&P also potentially at risk of breaking down as per everything we've looked at. All right, now let's go look at the shorter term S&P charts. All right. Okay, so we had yesterday looked at this is August 2015. We're pretty close on this actually. We got a low. It was the first hour, not the second hour, but we kind of took off after that, held up all day, and then we were looking for kind of a couple hours of rally. Didn't really get it. I mean, it was a really slow day, market day. So whatever, just put this on the back burner. But the idea for me remains the same. I mean, that is, look, so here's the S&P 500 short-term chart. This is S&P cash, right? That means no futures overnight session. And what we are looking at here are the same levels. I mean, so 29.17 would be, if you take from down here, which is the Friday low, that's where you would get 2 legs up, okay? And this would be your extremely bearish count, in that this is a first wave down or an A wave, right? This is a second wave up or a B wave, right? So you've got A, B, C, a little truncated C here, what have you. First wave down, second wave up. So that's what I'm looking at for possible next move. I will note, I talk about the put call ratio a lot. I will note that we did finish put call today at 1.2, which again is typically not extremely bearish. So that tells me that you do need maybe a little more, or need a decent rally. I mean, it's very tough to have a market drop, especially drop sharply when sentiment is as it is right here. And this is a very short-term sentiment indicator, but that's what it is. And markets just don't tank when everyone's ready for it. And clearly people are getting ready for it because there's more put buying than call buying. 20% more volume, I should say, is in puts rather than calls, is the proper way to say that. But perfect world, we open up, trade strong tomorrow, higher tomorrow, what have you, up into that 29.17 level, and then you have a put call down in the 0.7s or something, and then maybe even better if you stay up there for a little bit, stay up there all day and churn to get people all comfy inside, and then we pull the rug. Another thing that I talked about the NASDAQ a lot over the last number of weeks and months and et cetera, but one reason to look at the S&P right here, and look, I could be totally wrong on all this stuff, but one reason I'm looking at the S&P right here, the setups are there, right? The comparisons, the analysis, it's all there. Is that the S&P is the biggest, most liquid traded vehicle, right? Specifically like SPY, but if you're trading S&P futures, same thing. So if you are going to a period, we're going to have potentially a nasty, sharp, volatile period, right? Think those periods you tend to get maybe wider spreads, right? Maybe worse execution, what have you. Well, it's likely that you're going to have kind of those problems will be lessened, if you will, in something that's heavily traded, right? And not like the Qs or NASDAQ are not heavily traded. I'm just saying the S&P is more heavily traded, right? And if you also start to get a downdraft, sometimes you actually get people artificially selling S&P to hedge anyway, so it maybe exacerbates it. But that's, again, I don't have any data to back this up. I'm just kind of thinking out loud. All right, so there's the S&P. What else? We went through the whole dollar thing with 98, which I think is super interesting and potentially timely, like literally right now. Other currency stuff to be aware of. Obviously, the Chinese yuan. I mean, we've broken out here, okay? So this thing could continue higher any day. You could pull back, head higher, what have you. But we are in breakout territory here, and that's probably the real risk in terms of overnight risk is a fix that's just through the walls. Dollar yen. I still, dollar yen, I have a different dollar yen chart up here if I could find it. Here it is. So dollar yen, I still think you had a huge reversal, of course, on Monday. Most of that is Sunday night, but since then it's been absolutely dead, nothing. I like dollar yen lower. It's a downtrend. I don't want to be selling at bad prices. I'm looking at this chart. I think that the best level to think of a short is going to be the center line, and that's going to be, again, like 106.90. I would also, however, pay attention to 107.30s because, see, remember this day, 8-1? That was a huge volume day, right? That was a very large volume day, so that's an important day in terms of a vested interest place, and you've also got the 50-day average up there as well. So 50-day average and the high volume day coincide at the same level, so give yourself 106.90 to 107, say 35 or something as kind of a zone or a box to expect decent resistance. Now going strictly on the chart here, right, on dollar yen chart, I would note potential support still down here around 105.30, okay? So just saying, you want to be selling up here somewhere if you get the opportunity. But if you do get a drop into 105.30, you could still have a drop and then a move up to here, right? This could be an ABC, and you could go higher. So down into this region, don't completely ignore it. You want to see a reaction first, but that's certainly a spot at which I would not be surprised if we got some decent support. Okay, dollar CAD, short, it's not doing anything. I mean, we came back, we tested the underside like seemingly, I guess, all day. Yeah, so yesterday's high is here, and we literally have traded on this all day long. High volume levels 33.20, stopped 2 pips below it. This could still work out. Confidence not extremely high, but it's a setup. It's there, whatever. So we'll see. Kind of annoyed in the sense that this hasn't really worked like right away, because there was a period where dollar CAD and oil were kind of back in tune and moving together, and that hasn't obviously been the case the last couple of days because, well, shit, I mean, you've got crude oil 7-something% off its lows from a couple of days ago, and dollar CAD is laughing at it. So that's not a thing right now. British pound, great resistance into that median line. You can see the chart in yesterday's post. Excuse me, and trend line here. You do have 5 waves up, so you have a buying opportunity here. My guess is that you get one more drop, right? Just to be a B up, C down. You could have had the high today, right? B wave high, it's like 61.8 to the tick. You know, I'm not married to saying that you have to go down to 2130, 2140 because, hold on here. Because, here it is, because pound did hold the 200-hour average, right? So it's not crazy to say that that was it. I'm just saying either look for one more drop in 2130, 40 and turn bullish there, or turn bullish on a breakout above the median line, okay? So you want to be bullish, but depends, you know, the execution is going to depend here. All right, Aussie dollar, it's been completely dead. You know, if I go back to, I don't even think I have my longer term Aussie chart here, do I? Hold on. We should probably take a look at the Aussie chart in 98 and now, so I wouldn't be that surprised if they're somewhat similar, given the rate situation, which is a global growth thing. And Aussie tends to be too. All right, so let's go back to this. Sorry here, I'm a little discombobulated. All right. All right, so let's see what Aussie was like in 98. I haven't looked at this yet, so, and what we have now. You can see what I'm saying by the growth thing. Like Aussie and the 30-year yield have been pretty much joined at the hip lately. All right, so let's scroll this guy back all the way to the 90s. And we can get rid of crude oil. All right. Okay, so here is 98, and here is 2019. All right, so Aussie dollar, January 98. You had a low in early January. You had a low in early, well, that was the flash crash low in early January. Next top was January 31st. You had a top on January 30th. Then we had a low in June 16th, a low in June 18th. This is getting interesting. A high on July 19th, a high on July 19th, actually 17th. And we had a final low on August 27th. And so far we have a low on August 26th. So that's pretty damn interesting. I'm gonna add that to the, that's probably one of the closer ones. I'm gonna add that to the post today. So yeah, it's getting, I mean, this is just getting wild, these comparisons. All right. Well, then Aussie was pretty bullish up until November. Actually had a 5-wave rally back in 98. So yeah, I will have to throw that up there as well. And it literally did follow yield. And, you know, if you look at too, like the COT and copper and, you know, record short positioning in copper, that is a function of zero belief in global growth, right? The pessimism in global growth. And that says the same thing. It yields where they are. It says the same thing. The Australian dollar where it is. So these things are all one and the same. So yeah, I'd be on kind of alert, I guess, for something there. Pretty nuts. All right, New Zealand dollar, I will tell you right now that I don't have much to show you, but I will do my best. All right, so this is the long-term chart of Kiwi. Trend line is way down here, 61 and change. I mean, if you got there, hoping we don't get down all the way down there, but we are in, I mean, Kiwi's in absolutely just plunge land. It's been brutal with Kiwi. I haven't even tried to trade this lately. You know, it's a kind of a one-way train, but it doesn't do much, and then it just tanks, you know. So I would watch that trend line there. If you're looking at the New Zealand dollar, I don't really have much reason to look at it. You know, my guess is that we get some sort of a drastic volume drop and then reversal at some point. But might as well focus on euro, yen, pound. Those are the ones that look, especially, well, euro, the setup we talked about earlier, and pound because it's pretty damn clean, and Japanese yen because the chart's clean and the level of 107 to 107.35 is an absolute beauty. I do want to look and see where synthetic volatility is on this. It's not crazy high, so I wouldn't worry about it. All right, one more thing that I wanted to address real quick. So back to the analog that we have with the dollar, right? Saying that like now is kind of it. If this were to work out and if we were to drop, don't know what the drop will look like, but if we were to drop, my guess is it'll be really nasty given, it's not even based on the analog, but based on the diagonal pattern. The seasonal or the analog low is the 18th of October. Well, seasonals, DXY seasonals are right here. We had a seasonal top in mid-August. Guess where the seasonal lows are for 20-year, 10-year, and 30-year, October 18th. Volatility is so cheap right now too in FX that probably do an options trade. They're giving away volatility. So that's a pretty awesome little piece of info. All right. That's pretty much all I've got for in terms of what I'm looking at right now. You know, keep it simple as far as what you're trading. I mean, I'm, you know, like I said, euro, maybe pound, yen, maybe Aussie, and then the S&P. Maybe some crude at some point, but crude's going to be something that if we do get a drop in the market over the next couple of weeks, crude's probably something that you want to get bullish on after that. Not saying that it can't go up. I'm just saying that the wind is at your back a little bit more, right? I don't think crude's going to dump if the market does, but I think crude would be the thing to buy on that drop. Okay, so are there any questions before I wrap it up? And I'm going to archive this one. I think I forgot to archive last week's. I apologize. But I will archive this one. It should be up later tonight. Nothing? All right. Okay, well then everyone have a great rest of your week. Things like, based on all this, things could get really exciting over the next couple of weeks, which will be welcomed considering the low vol we have in FX right now. All right, I'll talk to you guys later. Have a good one. Bye.